All right. Welcome back, everyone. Let's go ahead and bring everyone in here.
Okay, we're good.
All right. Excellent. I'm going to unmute everybody real quick. Let's see. We've got everybody on. All right. Good afternoon, everyone. Hope everyone's doing well today on a Saturday. I know it's been a busy couple of days. I don't know how much of the content you guys have been able to see this morning, but it's been pretty good. So thank you for joining us on a Saturday, taking time out of your schedule. We're excited to hear from everyone. I keep wanting to say this morning, Gail caught me
I
on
know.
that. I said good morning, everyone, but it's afternoon now. I've been sitting in this chair since early this morning. So, but again, welcome all the attendees. We have a great panel here in front of us, and we are going to get their tales and getting started in real estate. So really pay attention to people when they tell their stories, because it's their perspective and what happened to them. It's going to help you. So listen, take notes, what things to do and what things not to do. Excuse me for a second. Been fighting something for the past couple of days. Bad timing on that. So I want to introduce everybody that's on our panel today. And we're going to start with Gail. Excuse me again. Gail, great to see you again.
You too, Brandon.
It's been a while since Atlanta, the last time we talked.
July.
Gail and I had a very in-depth conversation. It's great. I like having conversations on a elevated level, sometimes outside of business, more on a personal level. And it was great to be able to do that with Gail last time we spoke. But Gail, thanks for being with us. Gail is the principal at JCGC company, and she has sponsored 107 units in the past year. She's also an active investor and licensed real estate agent. She purchased her first investment property 30 years ago, and in recent years has made the shift towards multifamily investments. Gail, again, thanks for being with us.
My pleasure.
All right, next, Holly. Thank you for being with us again. Holly, I think you've been on one or two discussions this weekend as well. I don't think you've been in room 2 yet. I know you were just watching the last presentation. Had some great questions for Damien. And you're muted right now, just so you know. Holly is the principal of MQ Ventures and a GP in over 200 million in mutual multifamily assets. She has been a real estate investor for over 20 years via www.keepmore.com. Her mission is to provide people she cares about access to this better way to invest in real estate. Holly, thank you for being with us this morning.
Thank you. Can you hear me now?
Yes, we can hear you now.
Oh, well, clearly got to get a better camera, but that's all right.
Hey, it works. We can see you.
There you go.
All right. And next up, we have Evan Holladay. Evan, how you doing today?
Good. Glad to be here.
Good. Thanks for being with us. And Evan is a real estate developer and investor with over 176 million and 1,902 units of multifamily real estate. Evan and his team specialize in creating workforce affordable and mixed income communities using tax credits. He's the host of the top rated Monumental podcast. Sorry about that. I had a little typo there. Thanks for being with us.
Yes, glad to be here.
And Justin, how you doing today?
Good. How are you, Brandon?
Doing great. Justin is the principal at JBG Capital Investments and the host of the Cash Flow Hustle podcast. Since the loss of his father in May 2016, he has successfully managed to create a stable and passive income for his family through real estate syndications, with focus on becoming more actively involved in real estate. His investments in multifamily, self-storage, and RV parks around the country. And your intro got a little bit cut off there. I apologize for that.
No problem.
Again, thank you all for being with us. We're going to talk to each one of you about your tale in getting started in real estate. So what made you, or what brought you to where you are today? All right. So what I want to do is kind of go in the order that I introduced you. And we're going to go through and have you tell us about who you are. All right. That's important. We want to know who you are personally and what you're currently doing within multifamily real estate space. So Gail, I'll let you take it away.
Great. Thanks, Brandon. And welcome everybody else. Thanks for being here today. Brandon, I was listening to the last podcast as well, too, and I heard a little bit of a comment and feedback about more teaching and less stories. And I just want to share that the stories actually are teaching, whether you know it or not. Anybody can learn the skills, all right? But the stories, first of all, make you feel like you're not alone in the struggles that we've all been going through. I'm sure all the panelists today are going to share some of their stories. But it also helps you to avoid situations. So, and also there's something called happenstance. Happenstance means that things just happen by chance. That's what happenstance means. And my start actually came about because of happenstance. So I have had 30 years in the field of education, 30 plus years in the field of education, still teaching part-time right now for a couple of different universities. And I decided at the age of 55 that I was going to retire early because it didn't make sense for me to keep paying Uncle Sam a lot of money. And when I figured out my hourly wage, it was a little bit more than minimum wage for a very top job, all right? So I decided to retire, and I said, I need to do something now. Now, I had invested in real estate years ago, but I decided that it would be smart to start getting invested in something that wasn't as volatile and that I could leave to my kids. So the happenstance story, all right? I happened to do private money lending through my solo 401k to somebody I met. And that person introduced me to his cousin, who happens to be John Cohen, who happens to be a principal at JC Property Group, a principal at Toro Real Estate, and also a principal now with us at JCGC. Met him through the cousin, and the story just goes where we started to run different events together. My background in education, we did a lot of educational work, started to invest with him, and it just grew and grew to the point now where my son actually works with John now full-time under Toro. So my point is this, you never know through these stories today, through these connections today, whatever we're doing, the stories are invaluable. They really are invaluable. Our area right now that we're really looking into is the opportunity zones. We're really looking into it. We invested in one we closed in December, I think it was, or November. We closed in one, and I'm actually in and out of this conference right now because I'm looking at another one. I'm taking some road trips, and we've got another one we found out about off the market, and we're really looking into that now. So that's kind of my brief story, and certainly would be willing to sit down and talk with anybody like you and I did, Brandon, down in Atlanta.
Excellent. Thank you. And yeah, that's great. And so just to give everybody kind of a heads up, that this is going to be kind of how we're going to go through this. So I want everybody for each panelist to say who you are and what you're currently doing. Then we're going to, go through how your story began kind of one by one, and then some challenges you met along the way and how did you overcome them? And then what's the next chapter, or what are your goals moving forward? So just so everybody kind of has a flow of, the linear flow of how we're going to be having this conversation, but we're going to do each one of those sections, in order. So it keeps the flow going, and then we'll take some questions at the end. All right. So Holly, you're up next. Tell us a little bit about yourself and what you're currently doing within the multifamily real estate space.
Sure. So I came from Texas, and Gail just basically told my story. So we're about the same age. I had a very successful career in advertising and marketing, and my background is really data and demographics and all of that. And I've always been interested in real estate because it's about, people moving, trends, all of those things interest me. And I had a couple of single family homes and that sort of thing. So I kind of, this thing took on a life of its own. I helped a friend raise money. And, that's kind of how I ended up here. And I know I'm not supposed to talk about that, but I did. It's because you really have to know, because I ended up, how I got here was passively investing. So I invested with a friend to help him basically get started. And then it just ballooned from there. The guy's name was Joe Fairless. And, it's interesting how in this business, we're talking about stories, right? I've learned from stories. I've never had an original thought in my life, right? And so you find somebody that has what you want and you follow them. And so what goes around comes around. And so one thing has led to another. I helped, Joe raise some money, blah, blah, blah. And I became more passionate about this. And so I left my job in advertising once my passive income from all the syndications that I'm in, because I live in tax hell in New York City. And once my passive income was enough, I was able, through, lots of encouragement from lots of you people, to leave my job and become, so today I need something to do. I'm 56 years old. And so I help raise capital. And so I think that the more I learn, the more I am excited to be here. And it's all about giving back. This is kind of how I give back now, because we live in tax hell. And that's what Keep More is all about. It's all about really keeping more of your money. And I make less on paper, lots less on paper, but more in my pocket. It's crazy. So I didn't know any of this. And I was, I invested in stocks and I was successful in all of these things. And I did not know. I was an accredited investor, didn't know what that was. And so that's what I do now, is provide access to this club that people don't know about.
Excellent. I like the way you phrase that. And, I think that we can all say, Gail, you mentioned happenstance, and Holly, it's kind of the same thing. And I think we can all point back to something that's just that happened a point, and it wasn't anything we were really looking for. It just kind of fell in our laps, and, but you saw the value in it and followed after it. But I think the key is recognizing the value when you did see the opportunity. So thank you for that. And all right, Evan, you're up. Tell us a little bit about who you are and what you're currently doing in the multifamily real estate space.
All right. Thanks, Brandon. And honestly, I loved hearing Gail and Holly's stories. So thank you for sharing. And then also kind of going right into my happenstance moment. It was really when I was in college. It started early for me. I knew that I was in pre-med, studying for medicine, and realized that was not at all my path. I wanted to help people, but I wasn't passionate about science or chemistry. So it just really didn't fit well. So I saw this brand new development, $55 million mixed use development going in on campus. I went to University of Louisville, and I was like, you know what? I need to be a part of that. Like, I need to find a way, find the owner, find the developer, find out what's going on. I need to learn from that guy. And so I tracked him down and convinced him to give me a shot. And he wouldn't just give me a job, but he basically said, he's like, look, you bring out some people, the groundbreaking, I'll try to help you out. And there was no guarantee, but he was expecting like 50 people. We ended up bringing out a few hundred people. So that kind of was the start of my, career into real estate. And so I was the first one that he hired there at that development company. So I really got to see, from the ground up, what it's like to build out a larger multifamily development. We were negotiating leases with commercial tenants. We were leasing 380 units, managing the property, also learning that I didn't want to be on the management side because that was kind of my role at that point. But I really wanted to do what the developer was doing. I was like, I need to be like him. And so kind of like what we're talking about is, finding someone that is where you want to be and learning from them and adding value to them. So that's really what I did. And, from there in college, with a group, started a modular housing development company. And we used actually the same layout as a houseboat. And there's actually a bunch of houseboat manufacturing plants here in Kentucky. And so we were like, well, how can we put those people back to work? And, this was right after the housing market crash in 08, 1,100 skilled workers at these factories were laid off. We're like, well, let's put them back to work and provide good quality, affordable, energy efficient housing. And so we took that concept and started fundraising for it and actually built a few single family versions of it. And then we were trying to scale that into multifamily, looking for partners. And that's when I came across a group I'm with now, LDG Development. So LDG Development, we focus in on larger scale multifamily. It's either mixed income, workforce, or affordable housing. And so we utilize tax credits to help cover part of the cost of construction. And that allows us to build quality, affordable housing that people can actually afford and enjoy to live in and raise their family in. So I've been with LDG a little over 5 years, and just loving every minute of it. I'm based in Nashville, but I do a lot of work in Tennessee and Louisiana.
Awesome. Thank you. I like that go get it attitude of finding the developer, the owner of that property, and seeing how you can get on board. That's that's the kind of attitude I think you'll find amongst all the people that we've had speaking, that taking the initiative. I remember back when I was young, at one point in time, I found myself without work, but my friend was an electrician. And it's like, well, I can sit here on the couch and watch TV, or I can go to work for him for free and actually learn how to do something, and then within a year I was supervisor at that company, so it's really about looking for the opportunities and taking initiative. So great. Thank you for sharing that. All right, Justin.
I lost you there, but I think I know the question. So we'll.
Yeah, sorry about that. Trailed off. Tell us about a little bit about who you are and what you're currently doing in the multifamily real estate.
Yeah, sure. So live down in Houston. I still have a W-2 job, and am basically actively pursuing different areas in real estate where I feel like I can add some value. So in the multifamily space specifically, raising capital right now, and basically looking to work with different groups on, I guess, the GP side of things. I've been passively invested for a while with my family's capital, and we'll get into that, I know, next. So, we've got 2 little boys. One is 2.5 years old and one is 7 months. So, that all, I think having kids and stuff for me has really changed my perspective on what I'm pursuing and my why ultimately. So anyway, that's kind of the short and sweet of it.
Awesome. Thank you. And that's great. You brought up the question, or you brought up the fact of what's your why. I think we all have to ask that question at some point in time. And so why don't we run back through and everybody just give us a synopsis of your why. And sometimes keep in mind that sometimes our why changes. Like we had a why when we started, and now maybe our why is a little bit different. So Gail, let's start with you and get your why.
Sure. So I've actually written about it. I've actually taken a little bit of a break. I moved recently, so I'm living down in Florida now. Was from Long Island, Holly, so we have a lot more in common. I'm actually still building up there too, so I'm going to be going back and forth. In a past blog I've written, I say that there's really a couple of what I call the L words why people get involved in this, and it's for love, your loved ones. Justin was just talking about that. For quality of life, which is what I'm able to do right now. I've been able to step back a little bit, just did a lot of passive investing the past couple of months, but really step back and deal with all the nonsense that I've been dealing with, and selling a home and 2 new construction personal projects for myself. So it's that, and then it's the legacy piece. That's the third L that I really talk about. And I have 2 children. My son, as I mentioned before, is in this. And I have a daughter who lives down here in the Orlando area where I am today, and getting her started as well in investing too. So it's for all of those different reasons. The other thing for me too is I'm a big believer in paying it forward. All right, I heard, a lot of us are talking about that as well too. And we have mentored people, not through formal coaching programs, but we've really mentored several people. One of your speakers, actually, Brandon, was one of my mentees. Tom Costelli was one of my mentees. So, we've worked with him. And I just wanted to touch upon the mentee piece, because what we get, and I don't know if the other panelists get this too, but what we get as well, a lot of times is somebody will call us up and say, I want to work with you. I want to be a mentor. I want to be a mentee for you. I want to be your mentor. And my son, actually, Chris, wrote a great blog probably almost a year ago now. And he used to be a college soccer coach as well, too. And he said when he started coaching, he realized that it's not just about the mentor. It's about what does the mentee bring to the table. All right. And that's what Evan was kind of saying when he got his job there. He was basically saying that I didn't just walk up to the guy and say, I want to do this. The guy said, well, bring something to the table. And so if you want to be a mentee and, connect with somebody, anybody, on this great, event, this great summit here, think about what is it that you can bring to the table, because we're all busy. We all have a lot of time. And I really haven't met anybody who's not willing to help other people out. We all, I think, have that philosophy of helping one another out, but it's got to also be something where you're bringing something to the table and helping the company or the project grow or support it or something like that. So that would be my only suggestion to everybody out there, is think about what you can bring to the table as well too.
Excellent. Yeah, that's definitely been a recurring theme throughout this weekend is, what you're giving. And I like the way you sum that up in the love, life, and legacy, the 3 L's. That's something that, it's always nice to have something that you can capture and take away. So thank you for that, Gail. And Holly, tell us about your why.
So, I love what Gail says again. It started though with really my why was trying to help a friend, right? And what's interesting is now he's helping me through that. I discovered this whole thing, and now he's famous, right? And now what I've done is I've been able to help a couple of people who are now doing their own thing and quitting their jobs, and it's just what goes around comes around, and that's what I love about this. And I also love when Joe first asked me to help him raise for like his first deal, help him raise second deal, third, I don't remember what it was, help him raise some money. Can you help me raise $1 million? I thought, well, that should be no problem, because I worked for AOL early on. I early enough where I won't have my daughter will go to college, but not early enough to where I could quit my job. And so I thought it would be no big deal. I called up people that I know that have lots and lots of money. And they were like, oh, this is risky. Oh, this is that. They didn't understand what the hell I was even talking about. And so that, I told my accountant, once I figured it out, I told my accountant, I said, why didn't you tell me about this? And he said, because it's a private thing. You have to know people. And I'm like, oh my God. And I have people that I care about, right? And so it started with friends and family, and then they've told friends and family, and that's what's kind of happening. And now I'm just loving telling people about this big secret where, you can pay less taxes. At least that's been my experience. Your mileage may vary. Talk to your accountant, right? I'm not a financial advisor, but nonetheless, my why started out being my family. And now what I'm really excited, I have a daughter, Mary Quinn. That's what MQ stands for. And life is about choices, right? I mean, I want her to know that this option exists, right? And, you can, I want her to know, that she can do whatever she wants. She can go get a job, or she doesn't have to. She can do this. She can do this. But the whole point of it is all up here for me. We have this blueprint of how life is supposed to be. And mine was go to college, get a job, save as much as you can in the 401k, blah, 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 and just be a good soldier and go up the corporate ladder. And what I love about this is that nobody cares about the corporate ladder, and everybody needs a place to live, and we're able to, help each other. You've helped me. I've worked with you. It's I've helped you. It's just a really nice, like-minded people here, and I think that's what I love the most about it.
Yeah, that's great. And like I said, I think we've all heard this quote, from Zig Ziglar. I don't know if you guys, I hate cliches if anybody knows me, but I will quote this because I want to make a point. His quote is, "You will get all you want in life if you help enough other people get what they want." But I think a lot of times the problem is we focus on the first part of that. We can get what we want most in life right? So, I can do this. Well, the focus is on the second part of the sentence. What you should want in life most is to help other people, and naturally you will accumulate things that you need. Okay. So the point of that quote is to focus on others. And I think that we've seen that this weekend, in the sharing of knowledge. Just, there's people selling programs and mentorships, and there's nothing wrong with that. I'm not, and that's great. And we want you to participate in that. But we've also had just tons of just free content, not selling anything. Just, hey, look, here it is. Listen, write it down. I bet you didn't know this. And that's why we're doing this as well. So, right. All right. And so I don't want to steal too much other thunder. So let's go to Evan. Tell us your why.
Yeah. So I think it was like you had mentioned, when you start out, it may be different than what it is now. And I think it changes over time and as you learn and progress. But really when I started, it had more to do with, I was in college and I saw this development. I was like, man, how can I make an impact on others through our living environment? We spend a lot of time inside of buildings. We live in apartments. We live in houses. We eat in restaurants. Like, we spend a lot of time inside. And I was like, man, I just would love to be a part of something where I could impact people's lives through their building, like through their built environment. So that was really my why at the beginning. I wanted to be a part of something big and make a big impact, and be able to build some really impactful buildings. And really since then it's shifted. It is still part of my why, but I think, to Gail and Holly's points, I've had a lot of fun just helping other people, and people are, asking questions, and I love helping people on their journey and getting started in real estate, and, being able to teach one or two little nuggets that may be able to change their whole mindset and change the way they look at it by owning or investing in real estate. So I think that's been key for me lately, and helping others get into real estate has been very powerful for me.
Excellent. Thank you, Evan. And Justin, I know you told us your why. And so I kind of stole that from you already, cause you kind of queued that question up, but kind of explain, you said your why is your family. That's my why as well. Actually, right after this session during the break, my family's coming in. I'm going to get them on camera. So I have 4 girls. So they'll be here. I called them up and asked them to stop on by and say hello to everybody. But Justin, tell us a little bit more about your family and your why.
Yeah. Awesome. 4 girls. My goodness. 2 boys is keeping my hands full. So, it initially started, from an unfortunate event. Like you read in the bio, my dad was killed in an auto accident, and we needed to figure out, kind of how to bring some stability, I suppose. My mom's a retired school teacher. They have some land not too far from Houston, and the plan was always to kind of retire there, raise some cattle, watch the grandkids grow old, and then, in the blink of an eye, everything changes. So this is, not unique to me. This is, many people have dealt with similar situations, unfortunately. So what, I decided to do was, tried to learn as much as I could to bring that stability to her, income throughout her later years in retirement. So we started looking at, initially all I knew was stocks and bonds and things like that. So, but and as we've seen here at the tail end of last year, we didn't want was her to have to worry about her income being on a roller coaster, what she could take out or bring home on a monthly basis. We were looking for something more just stable while being passive. So always knew about real estate, but never really took a deep dive into it. And, so that was certainly the catalyst. And then now, as I continue to learn, listen to people's stories, network, and all these amazing things, it really sheds light on the important things, to be able to ultimately do what you want to do, not what you have to do, whether that's a job or whatever. So this is a tremendous opportunity, various real estate niches, multifamily in particular, that allow you to get involved at various levels, whether passive or active, and provide value to those who, as Holly mentioned earlier, I think, they didn't even know this thing existed as a tool that the wealthy have used for so long to create some level of passivity and stability in their portfolio. So at this point, focused on, I suppose spreading the good word. And that's about it.
Yeah, that's great. And, you mentioned that all you knew before was, stocks and bonds. And, we've all mentioned this, how we grow up with this mentality of, what life is, like we're go to school, get a job, work, save for retirement, and that mindset. And then it's like, if you've ever seen the movie The Matrix, and they get exposed and you either take the red pill or the blue pill. I think we all had that moment in our lives when we discovered this multifamily, this real estate investing, and this light bulb goes off, and it's just like, and all of us have just dove right into it, right? Because it just made so much sense. It was like, wow, what in the world have I been doing my whole life, not investing in this, and like you said, real estate is a part of every, any of the super wealthy are invested in real estate because of many reasons, stability, tax savings. So, you learn from other people, but, and you obviously stumbled across it when you were researching for ways to provide for an income for your mom. And that's a great story. And you obviously, same thing, you had that moment of, illumination, and it's like, wow, this really just makes sense. I mean, where else can you have passive income? It's just making money. And it's stable, even through financial crashes, because people still need to rent apartments and homes, even in a down economy. And, back in 2008, when the economy went down, I was actually in new construction at that point. I was a general contractor, and I was not in multifamily, and that wasn't even in my mind space at that point. And I remember thinking, as that was occurring, I was like, man, I need to get into rental properties, because nobody can get loans right now, but everybody has to live somewhere, so they're going to rent, right? So I had that thought, but didn't ever make the connection. I finally did make the connection, but at that point had not made the connection into multifamily. So, all right, now what I want to do is ask for you to share a story about something that has happened to you in multifamily. And let's maybe let's start off with maybe one of the worst things that's happened to you. And we'll start off on a negative and end on a positive on that question. So start with one of the worst things that has happened to you, but what you learned from that. So we're going to go in that same order. Gail, I'm going to let you start.
Sure. So I'm going to probably cover the thing we spoke about in Atlanta. It was the worst thing, but yet the best thing. So I'm going to answer both parts here right now. So we had broken into the Jacksonville, Florida area. We've been trying to get into it for years. Very excited about it. It's something I've been tracking for 2 years. We broke into it, got a great property manager. We still have her down here. And we got another building then immediately referred to us and got it under contract. when we came down here, down to Florida and did due diligence, some very bizarre things started happening. We knew that there were some problems with the plumbing, and we had kind of heard that there was something with the stacks. We were prepared for that, but then we found out things like all the back doors didn't open up in all the apartments. Windows needed to be replaced. The plumbing was worse, but all that you can deal with. The pool was not filled in properly, things like that. I mean, all those things you can deal with. But the reason why we walked away from the deal, all right, and it was a good deal on paper, was the property manager and the owner refused to show us the paperwork, wouldn't show us the rent rolls, wouldn't even allow us to take a look at it, our property manager to take a look at it and just say, are these tenants creditworthy or not? And we went back and forth, kept trying to come up with all different ways, send us an Excel spreadsheet, leave the names off. They were making kinds of claims about, we're not going to release social security numbers. We're like, so redact the social security numbers, just give us the information, show us. At the end of the day, we finally said, well, we've got a little bit of money into it. We had at that point, I think we had maybe $20,000, $30,000 into it, the four of us, the four partners. And we said, what do we do? Do we keep moving forward or do we move back? And we decided to pull the plug. That's what we ultimately did. So that's why I say it's, worse, but best. And we've subsequently found out that our property manager, who we are still using, is managing the property. And it's doing quite well, unfortunately, but it wasn't worth the risk. It wasn't worth the risk for us. It had some really good upside. One of the things that we have looked at in some of the older Florida construction in the 1970s is many times they have storage rooms actually, where they used to put supplies. And in the one unit we have in Jacksonville right now, we converted it into a studio, and it makes it affordable living. So going into what you're saying there, Evan, we can give people affordable living. We convert these storage rooms into studio apartments, and we've had people, people who are on disabilities. Unfortunately, it's somebody who was in right before hospice was coming in, and we can really give people a quality of life. The one thing that we liked about that building that we turned down was we could have done that for 6 more units. It had that much storage on it, and we would have been really, it would have been a win-win for everybody. So that's our best, that's our worst. I think the piece of advice that I would give is to, follow your gut on it. The numbers are the numbers, but if something isn't sitting right, don't force it. Other deals that we've forced, just very quickly, we're doing a flip right now in Charleston, and we forced the deal a little bit because it was a friend of another property manager down there, her husband and whatnot. We can't get rid of it, right? And we can't get it done. We can't get rid of it. We're, trying everything we can to possibly do it. And we don't do a lot of flips. This was like Holly said, helping out a friend of a friend, so we were helping somebody out, and we forced a deal and we're paying the price. So that's my best, and I guess my best and worst. Well, that's maybe not my best, but a good and a bad.
Yeah, well, that's great, and this is what this is about, right? Tales, so there's multiple stories that we can all share, and each one of those are bricks in the foundation of where we are right now, or the pedestal that we're sitting on right now. Talking about going with your gut, Dan and I talk about that all the time. Deals can get emotional. Let's not kid ourselves, right? There are properties that I want more than other properties, and you have to take the emotion out of it in those senses. But there's also that gut feeling that, I've said it before. I can tell whether we're going to bid on a property the moment I pull up to it. You have to vet the property still. Okay. But, I have that feeling of, this is good. I can say I can rule it out, or I know whether I'm going to rule it out or not when I pull up on the property. So that gut feeling, and then setting, your criteria and then sticking with that, not like, oh, it's only, 20,000 over what we said we were going to pay for it, and we really want it. So why don't we? No, you said your price, stop at your price and walk away. There's more deals coming down the road. So, that's a very important rule. And thank you for sharing the story about that, and going with your gut, because you never know. It's doing well now, but there's so many factors that could have gone the other way. So, all right, Holly, share with us one of your worst stories?
You know, most of my worst stories have turned out to be best, but I will say that, probably the when you're talking about emotion, letting emotion get into it. One of my whys and part of my story is that my parents passed away, and they had done a lot of things. I could have really helped them, like like Justin just, it's wonderful, right? Because they died in 2011 and 2012. And when the stock market crashed, I don't care how safe you were, anyway, whatever. And so they had this beautiful house, but it was like they built this thing and retired in Mississippi, of all places. And I told, I didn't want them to do it. I grew up in Houston, and I was like, oh my God, don't do this. But they did it. But what happened to me is that I knew that was their dream home, right? They did all this stuff. And so when they died, I spent a lot of time and energy with this thing because I didn't want to give it away. But you really had to give it away because no one wanted it. No one wanted to live in Mississippi in the woods, and whatever. And so I did spend a lot of time, and time is the most precious thing we have. And probably a lot of angst, but, things take time, right? When somebody passes away like that, I could not help but be emotional. So I've been pretty good about not being emotional with real estate deals, but this one I was emotional, and I really just couldn't give it away. I ended up, it ended up being fine. I did a lease purchase thing and, whatever I did, but it was just sort of a real hassle. And as it sat there, it needed more and more stuff done to it. So, I know what to do. I knew it was a bad thing. I should have just unloaded the thing, but I just couldn't get there emotionally. So that was a big lesson. I don't know if I would even change anything because it takes what it takes, right? I mean, it was my parents' dream home. So it's just the way it goes. But I know I'm very, very cognizant of what emotional attachment can do. And I do not get emotionally. If I'm emotionally attached to something, I don't do it because I know as far as a deal, I don't do it. And I tell people that are investing with me, don't do it. If you don't think this is like a good thing on its own, just don't do it. Not worth it. Yeah.
Yeah, because it skews your judgment, and we don't even understand what we're not seeing when our judgment is skewed, right? So,
correct.
So if you just go ahead and mark it down that if you're emotionally involved, your judgment is skewed.
Exactly. I run from it.
Yeah, exactly. So great story there. And you mentioned, I don't think I'd even change anything. I don't think any of us would change anything that's happened to us negatively because that's who we are. Mm-hmm. That's what builds strength. No resistance equals weakness. Mm-hmm. So that's brought us to where we are. So thank you for sharing that.
Yeah. Hey, Brandon, if I can just jump in for 2 seconds. That's the learning. So that going back to the original point about the stories and teaching more, everything that we have gone through is the learning that got us to where we are today. And I think that's really what we're trying to emphasize here. So excuse me for interrupting, but I thought it was important to say that.
No, that's great. Thank you. All right, Evan, tell us your worst story.
Right. So if you're not successful, then at least you're learning. So I have 2 quick stories. One of them was on my first deal that I ever did, multifamily deal. It was 192 units, new construction. And, I had everything lined up and we were moving towards closing. It had been about a year of pre-development work that had been done. And in tax credits, there's usually a lot of hurdles right at the last minute that have to be done with state agencies and city officials. It can be very cumbersome. So I'd gotten a call. They're like, hey, we got the final approval. We're ready to close. And I was beyond excited. And then literally 5 minutes later, I get a call from our broker. He's like, hey, I don't know if you realize this, but he's like, I didn't catch this either, but part of our site is out of contract. And I was like, no, like this is my first deal and I'm about to lose it. And he's like, the owners, they want more money. And I'm like, no. we're literally a week out from closing and this happens. And so luckily, I mean, it was like it was in total it was 12 acres. But we added on about an acre and a half, buying a single family lot adjacent to it. So that was the contract that went out of contract. And from that, I think we had it under contract for $90,000. And so they literally could have named their price and we probably would have paid it because we were that close. We had so much time and money invested into this. And they ended up saying, they're like, we want 120. And we're like, oh my God. It's like we got very lucky. But it taught such a valuable lesson to me that, pay attention to every single detail on every deal that you work on. And you really have to know the deal better than anybody else, especially if you're leading it. I think that drove it home for me because that literally scared me half to death. I was like, oh my God, I almost lost my first deal for something so silly as letting a contract run out. Because we sometimes, in new development, you have to renegotiate contracts because things take longer than you expect. But that was something we could have had control over and we let go. So that was a huge learning lesson, to pay attention to details and know the deal better than anybody else. And then the other one was I had another deal, and long story short, it was because of the economics, the local economics, the numbers just really didn't pencil out. And we had already invested like 2.5 years into this deal. And so I just kept pushing. And I think part of it was because I was emotionally attached to the deal, which is what we were just talking about. And I really I had so much time and energy and relationships invested into getting this done that I kept pushing. And so I think, eventually I had given up on the deal, but it took me probably a year longer than it should have to give up on it. And long story short, we ended up kind of what we said is, let the deal go out to pasture. And then if it wants to come back to us, it will. Again, this is a new construction deal, 192 units, a different deal. Crazy enough, the learning lesson is, realize when to pull up stakes and move on. But the kind of the crazy ending to the story is we actually just closed the deal on 12/27, just right before the end of the year. And it literally took us 4.5 years to close, but it was out of contract for like the last year. We had an investor come to us like, hey, we really need a deal in this market, to fit our criteria. And so we said, we're like, well, we can resurrect it. And so within 3 months we had closed the deal. So it's a good story, but it taught me a lesson of, know when to pull up and start working on the next thing.
Yeah. That's so important. I think we all have the tendency to think things are going to turn around on a decision that we've made that is a bad decision. And really the bad decision is deciding to ride it to the ground, right?
Right.
Everybody makes the decision was made to follow the deal, right? The bad decision was following it till it destroys.
Exactly.
Yeah. And that's excellent advice and great takeaways, especially the details. Underwriting is such a huge thing. You're especially when you're dealing with OPM. That's very important. This is not a game. We want returns for our investors. These are people's lives, their investments, and so it's important to pay attention to every single detail. A lot of responsibility there. So thank you for sharing that story, Justin. Tell us what you've learned from your worst story in real estate.
Yeah. So specifically in multifamily, we've been very blessed, to thus far have partnered with the right strategic partners and things. When I started down this path of trying to figure out what I was interested in real estate, which happens to be a fair amount of things. It led me to take a swing at flipping a house. And I realized not directly related to multifamily, but circling back, one of the things I failed to do on that particular deal was structure it in a way that, kind of would allow me to participate in the upside, but protect my downside. I ended up buying it from a wholesaler who at the time I could have probably structured that deal to just 50-50 partner on it or something like that and have him kind of hold my hand down that. Instead, he wholesaled it to me, and I took all the risk. And it is crazy to think back. I hadn't thought about it in a while. I try not to. It's some pain involved. So we bought the property, had contractor issues. We had issues with a survey issue and dispute. So when I went to sell it, ended up owning 10% less of the land than I thought I did on an acre, which down here, equated to a fair amount of the total deal's value. I had termites by the end, just all kinds of things continued to happen. It was truly amazing. I wondered where the bleeding would stop. And sometimes I'd think back on that for a while. It really messed with my head and my confidence at the time. That was my first deal. And I love the stories of people coming out of the gates and just hitting a $50,000 profit or something like that, why not? But the reality is that, it doesn't always happen that way. So, for me, the value and the takeaway was to become more strategic, I suppose, in the decisions that I made, and really try to find partners that we had alignment of interests, first and foremost. And that's how I approach any of these multifamily deals, whether I'm trying to get actively involved now or those ones that we've done passively. If we're not aligned, if some of the things that are important to me and my family related to stability, security, preservation of the capital, things like that, if those aren't some core principles for that operator, or at least they don't mention them, in casual conversation, then for me, it's just not a fit. So again, I guess, to circle back, that's kind of the lesson learned. I think in the game of real estate, it's important to have good teams. And kind of find your path at what you're good at, and rely on those team members who are aligned with you to execute and help you achieve your goals. So you don't have to do it all on your own, I guess, is the point.
Yeah, definitely. Having a strong team is, but like we said before, those mistakes are what brought us to where we are. And it's who we are. So let's go back through and let's have everybody share. I think we kind of had the worst and best stories, but maybe your favorite story or a funny story or something that, we want to share people, or an encouraging story. Even on a personal level, a tenant that you met in one of your properties, and how you made their life better, something like that. Just share something positive with the group.
Sure. So I'm going to do a personal type of thing. So as I mentioned before, we've done some mentoring. I did see the question, but I'm in the question thing, but we'll get to it later. So for me, two sides of it. My son was kind of lost after college, went to college, played soccer in college, did a little bit of coaching at a couple of different universities, did some stockbroker things, and couldn't really find his niche because he loved college. He loved soccer. That's really what he would have loved to have done for the rest of his life, but it just wasn't going to happen for him. So for me, it was with my nephew getting involved in real estate, said, hey, maybe you want to come find out about, originally we were going to do flipping houses, and like Justin found out, we said that's not the path to go down because for us at least, too much risk and sometimes not enough reward, and maybe sometimes too much grief also. So we were going to do that, and my son was like, well, I don't think I really want to get too involved in this, but I finally convinced him to come down to a couple of different workshops, started to see the value behind it, sent him actually down at one point to Philadelphia to look into buying notes and deeds. He was knocking on doors, checking out properties in not the best areas. But slowly he started to see the challenge behind all of this. And what I mean by the challenge, it's not the fund, not the raising. Yes, that's challenging, not finding the property, but it's the challenge of actually making the whole thing come together, analyzing it, finding the deal. And if you knew my son, you would understand that that's like exactly his niche. He's competitive. He likes to find things. He likes to problem solve, and then the fun and the joy in seeing something come through. So this is now his career. So for me, on a personal level, having somebody who was kind of not really being able to find his niche and finding it and loving it. And it was great. The second part, we did mentor a couple of people. And for me, the joy was in seeing some of the people who I mentored actually go out, find their own properties, understand, how to find areas, how to do a market analysis. I remember one of my mentees saying to me, how to go talk to a bank. And because we had practiced this, and he says, I sounded like I knew what I was talking about, even though I wasn't really sure what I was talking about. And then just seeing people who we've worked with get that confidence, get some skills in working with us, and go out and get their own deals, and now be able to do the same things for their family and for their lives, and then in turn helping out other people. So those are my positives out of this. Again, if people haven't realized this yet, yes, we happen to all be real estate investors, but this is a relationship business. This is all about relationships. And that's why these stories are so important as well, too. So seeing people who I care about doing quite well, there's nothing better.
Excellent. Thanks for sharing that. Holly, tell us a positive, uplifting story.
Yeah. So we have a rentals in Brooklyn. And one of our tenants, we suspected that she was having a tough time for a number of reasons. And we basically went up there and discovered her sitting there because we were afraid she was dead. I mean, seriously, she hadn't come out in a long time. And she was a hoarder. The whole apartment was it was just so bad. And this girl was, a really smart person. And, so instead of throwing her out, we got her some help and let her stay there free and did some things to help her. And, now she's a successful talent scout in LA. And works, she's doing great. And I'm going to see her next week when I'm out there. And she wants to invest in one of our apartment complexes. She's like doing great. And so that kind of thing, we really try to do. We try to charge less than the market rate and try to we have one that has been there 14 years and she's a dancer and she pays probably half of what the apartment's worth, but it's okay. It's okay. And so that kind of thing, it means a lot more to her than it does to us to live there. Right. And so it's not going to change her life if she paid market rent. So she takes care of our garbage when we're gone and all kinds of great stuff. So those kinds of things, I think you get what you give. And so that's, I could tell a couple of other stories, but that's probably been my biggest one.
Excellent. Thanks. That's great. To see, especially now that she wants to invest in one of your deals, just, full circle. Right. Evan, share with us a positive story that you've come across.
Yeah. So we, in Nashville, we just 2 years ago, completed a 240 unit multifamily, workforce housing development, not too far away from downtown, just north of downtown. And kind of the very impactful moment for me in what we do in workforce housing, kind of similar to some of the other stories, but there was a lot of times we ask at the groundbreaking or the grand opening, at the grand openings, we ask residents to actually the person or people or families that we are impacting. So we had a gentleman, he was 26 years old, speak. He was the kindest guy, and he had been homeless his entire life. And so that was very impactful for me, just knowing that, we could help just play a part in giving him an actual good quality place to call home. And he was telling us at the grand opening how when he put that key in, he literally couldn't even turn it because he was crying so hard. So that kind of brought it all home, as like, oh my gosh, we actually do have an impact, and this is even with value add, multifamily deals, we're all providing places for people to call home. And that's so important to the people that live there. So I think that's really important. And then, I think that's, just remembering who you're actually serving, and that it's actually more than dollars. I think that's really important.
Yeah, great point. Great point. It's easy to get caught up in the numbers, because it is a business. But you have to remember, it's a business that sells a product to clients. And so, and you will affect your clients' lives by the product you provide. So it's more than just the numbers. But if you do it well, the numbers will show themselves, right? They'll respond, by purchasing your product. So thanks for sharing that. Justin, let's get your take on your positive story.
Yeah. So, just keeping it right in line with, I guess the rest of my theme here with, just being able to provide that stability for my mom. She was able to, we were able to purchase a house for her down here, close to the grandkids and stuff, her only 2 grandbabies. And, she's able to enjoy, time with them without worrying, every day about the, what's going to happen with the stocks when they decrease by 50% or whatever. So, and then I've been able to make introductions for a lot of family and friends to different syndicators and stuff that we've developed relationships with. And just to be able to, make that introduction. And, I have confidence in that. I always tell them, anybody that I plug into a deal, we're invested in it as well. And for me, there's, it's an odd feeling, but certainly to invest with your mom's money is a lot on the line for me. The last thing I want to do is make a mistake with that. Yeah. So I've got confidence in those groups and those people that we've got, and to be able to give that type of confidence or share that experience with other investors and stuff like that, it's makes me feel good. I know that they're in good hands and stuff like that. So I've enjoyed that.
Excellent. Thank you. All right. So let's talk about on our journeys or tales. Can each of you quantify or name your biggest challenge in your journey to where you are today? What was the biggest challenge you came across? What was the hardest thing?
For me, I think the challenge was raising money. I think that's, learning how to raise money at first. My original network really, where I was, didn't really support that. Learned how to do that since. As a matter of fact, it's one of being down here in Florida right now, I'm working on my investor network. So for me, it was really learning how to do that, having the confidence, feeling like I wasn't imposing upon people. I think that was something that, I felt a little awkward about at first, like asking friends and family for money, and then going back to what Justin said, God forbid something doesn't go well. How do you sit across the table from a family member and say, by the way, you just lost this amount of money, or the deal has turned belly up. So I think that for me was learning, I don't want to say the right way to do it, but just learning how to approach people with this. I feel comfortable doing it now. I talk about it all the time, as a matter of fact, but it's just really getting in there. And I would say the other challenge that I see with a lot of people too is overcoming that fear. I think I didn't have that, but I see that with a lot of my people who come to our meetup groups and people who I've worked with in the past. I'd say the challenge that I see in a lot of people is that fear, the fear of doing this, the fear of making a mistake and whatnot. So while I was afraid of messing up a deal with somebody else's money, I see other people just being afraid to even take that first step.
Yeah. Thank you for sharing that. And again, it's, I think when we first start out, we still have the mindset that we're selling people on something, but once we get into it more, we realize that we're helping them. So it becomes much easier to talk about because we're not selling. We're like, hey, you've got to check this out because like what it's done for me, I want you to have that same benefit. So yeah, I think that's a lot of that. But
exactly, that's exactly it. It's actually a shift in our mindset. It's not a shift in their mindset. It's a shift in our mind, or at least for me, it was a shift in my mindset where I was imposing and selling something. And I hate salespeople. I hate online. I just do. That's my thing. And we had businesses in the past where we were selling a product. So for me, I kind of associated it all together. But then when I started to realize that I was actually sharing an opportunity, a very, very different mindset. And when you come from that mindset, and then people either take advantage of it or they don't, and that's okay.
That's right. You can lead a horse to water, but you can't make him drink, right? So that's something that we've definitely learned. Is like, if you're having to convince someone to invest in it, that's not where you want to be. Show them the value. They'll either see it or they won't, and they'll either say yes or no. But you don't want, definitely not salesman-y, like you said. I have the same sentiments towards that. Holly, share with us what your biggest challenge was.
Well, raising money, it's the same. I had no idea that it was going to be this as hard as it is. And I've just really reached kind of a tipping point, I think, because a lot of the people that I've been talking to for 5 years now are like seeing what's going on with me and seeing that changed my life and, a couple of others, right? Lots of others. And so it's, I think that's the key is having that attitude of service as opposed to, I need to find investors. You're really letting them into the club, right? I mean, whether they realize it or not, one day they realize it, or they don't, it doesn't really matter, but it matters because I care about people, right? But there are still people that are super, super smart and super, super good friends that still think it's too good to be true and think it's, it's just incredible, right? Because of that blueprint that's in our head. And so that's really kind of it's the greatest thing about this, but it's the hardest thing about this. And so it's getting much easier. Now I have people coming to me in waiting lists. So that's relatively new, right?
Well, yeah, it definitely has grown. The platform has grown, and that's part of what we're doing here this weekend. We have people that are listening to these panels and to these discussions that are just trying to learn, right? And so this content is helping, and they may invest down the road in a deal. We've always asked people what you're looking for, or people have always asked us what we're looking for when we go to a conference, and we say, well, it's not, you can't really quantify it that way. Like, I'm looking for A, B, C. You're just going to meet people, and you never know who you met at that conference that you're going to work with later on down the road. We can say that about people on this panel, right? You have conversations, you get to know people, you build relationships, and you work together, or you don't, and it's great, and you meet people and you learn stuff. So right. It's a win-win.
That's exactly right.
All right. So Evan, tell us what your biggest challenge has been getting started to where you are today.
I would say, and I think this kind of affects more than just multifamily. I feel like this affects people in general, but I'd say two-sided is that I am very ambitious, and I really want to make, a big impact, and I want to grow what I'm doing as quickly as possible and grow the impact. So I guess sometimes I get frustrated at, certain setbacks I have, but realizing that those are learning lessons instead of actually, seeing them as faults in myself or faults in what I'm doing. And then the other side of that would be, I think I had in the past, I've gotten much better at it, and I think everybody kind of at some point or another struggles with this, is comparison to others. I think that's, a lot of times we'll get in our own head and we'll play our own worst enemy, where we'll say, well, how are they doing this? And why haven't I done that? And, you have these voices in your head that just play against you sometimes, and they can really demoralize you. And I think it's powerful to realize that does happen, and then be active or proactive in saying, look, I'm bigger than this. I'm comparing myself to who I was yesterday. and not who other people are, because I'm on my own journey and I'm, on this learning every day and committed to being better every day. So I'd say just in general, even outside of multifamily, I think that's very important to keep both of those in mind.
Excellent. Yeah, great viewpoint there. Justin.
Yeah, I think a couple things for me. One has been mindset, a shift, like everyone's kind of mentioned or touched on it, and one of the quotes I like is, whether you think you can or you can't, you're correct. And for me, came out of I got up to the batter's box, swung and tripped coming out of home plate on my first deal in real estate. So what better time than to tuck your tail and say, this just isn't for me. And I think for all these people, that took the initiative to join this conference and take the opportunity to learn and begin their networking process, that's part of the journey. Like Evan said, the other component is emotion for me. Obviously this started out as from a place of, terrible emotion. And to be able to, with time now, kind of remove that and, look more, I don't know what the proper word is, but trust the numbers, have confidence in the teams that you've put in place, the deal, yourself. It comes with some time, but try to, not you don't want to remove emotion completely. I'm still passionate about what I do, why I'm doing it at all, but remove some level of that emotion from the decision-making process. I think take you a long way.
Excellent. Thank you again, everybody, for sharing these. I have actually a couple more things, but I don't think we're going to have time to get to them. And I do want that we have a question up there, especially for you, Gail, on mentoring, and I want to leave a little bit of time for that. And so, Gail, do you want to answer Margaret's question?
Sure, I saw the question. Yeah, so so for us, some of the things we were looking for people to do cold calling. We were looking for people to do data entry. We were looking for people to put out mailers for us. We were looking for people to do market analysis. Some of the, maybe more the not as glamorous work, but the grunt work. But that's how it all starts. So we were looking for that, but that doesn't mean, like right now we would be looking for the same thing. So I think it's really a discussion. To me, I always tell people, sit down with the people you're interested in working with, ask them if they can meet you for coffee, for a drink, whatever it is. You as the mentee, you pay. That shows respect for their time, and find out, if this is something that, are they looking to work with you? What are they exactly looking for? What skills do you bring to it? And if it doesn't look like it's going to work, say, thank you very much. Can we still connect? And if something happens in the future, and look for somebody else who may be more of a match for you. So, work on your own skills. It's not money. Believe it or not, I don't think most people are looking for money out of a mentee, which I think is the misconception. Sure, I don't think any one of us is going to turn down an investor, in all honesty, but that's not really what we're looking for. I've heard every single panelist here and in other conferences as well, too, say they want to work with people, but bring something to the table and make sure that it's got to be a match. It's a relationship business. So I don't know if somebody else has ideas as well too.
Yeah. And so the question had relation to what kind of value can you provide to your mentor as a mentee. And I think it has to do a lot with recognizing the value in the mentor. And instead of asking, what can you give me, go to approach them with, what can I give to you? Because you recognize the value already when you go there. I think that's the mindset you have to have when you approach your mentor as a mentee. So we've got a couple minutes left, and let's give our listeners some advice. That let's keep this like a 30-second or even shorter, like a 15-second or phrase piece of advice that you would give them that you've learned. So Gail, let's start with you.
Sure. Two things. Number one, set realistic goals. Goals have got to be, there's something called SMART goals, but observable, measurable, have a specific time frame. Something like, I want to make a lot of money. That's not a goal. I want to, read one book by the end of the month. that's a goal. So make sure you have solid goals and ask yourself what you're afraid of. That's my other piece. Look at your fears, confront them face on, and ask yourself what you're afraid of, and decide whether this is for you or not. And if it is, jump in the deep end.
Oh, I think I got muted there right then. Holly, can you share just a really short piece of advice?
Always remember that you know more than you think you know. That you have a talent. I don't know what it is, but you can bring lots of things to the party.
Excellent. Yeah. And that's something we forget about ourselves often. Evan, what's your advice? You're muted, Evan.
That would help.
There you go. Hey, I've done it a couple times during this.
So to compound on what Gail said, I think really having SMART goals and then looking at it as not just the goal, but all the pieces within that goal, and looking at what you can do today that will break it down to the easiest first step possible, and do that as soon as possible. Just take action toward that easiest first step that'll get the ball rolling.
Excellent. Great advice. Justin.
Yeah, I think the short version is always approach situations, relationships, whatever it may be, with the mindset of how can you add value to your team, to your mentor, to your associate, whatever. And it's been mentioned on this panel, and I'm sure plenty others throughout the weekend. That stuff comes around, so if you're consistently adding value and focused on that, then good things are to come.
All right. Well, this has been a little bit different panel discussion than what we've had throughout the weekend, which I like. It's been much more personal, much more conversational but like we talked about starting out, where's the teaching? If you didn't learn from this, then you weren't listening. You weren't paying attention. Even though we weren't teaching, in a linear fashion, ABC, point, you have to glean from it what was given, right? So pay attention. There's a lot to learn here. So thank you, each one of you. Hey, I mentioned that my family was going to come in, and so if you guys want to see my why, they're here. They're right over here. They came in while I was talking. So if you saw my video go off a little bit, I was saying, "Hey, come on in." So Gail, I know this is my family that we talked about in Atlanta. So everybody, if you'll just group together right there on the window right there. I'm gonna try to move the camera here.
Oh, that's wonderful.
Wonderful.
Hello.
Hi.
You're the reason he's so successful, right?
That is it. Holly, isn't it always the women behind the men? I'm sorry.
Oh, my God.
Absolutely. I can attest to that.
Absolutely.
So that's my wife, Ashley, my oldest, Eliza, my second, and the dark hair in the middle there, Olivia, Madison, and Savannah.
Oh, my God. That's awesome.
I'm
Beautiful.
glad they got
awesome.
to come in today. So let me fix my camera here so you can guys
Real
see me.
estate moguls.
Yeah, exactly. Yeah, I got to teach them young.
That's it.
Young. All right. Well, thank you everyone so much for joining us today. I had a great time.
Thank you. It was great meeting everybody.
Absolutely.
Thanks a lot for having us.
And what other hold on one second. What other conferences are you guys going to be at? If anybody wants to meet up with you guys going to a conference soon?
I'm going to be in Denver at Joe's conference next month.
Okay.
I was looking at going to Joe's, and then I'm also going to 10X in a few weeks in Miami.
I'll be at both of those.
I haven't scheduled. We're actually talking about putting one together ourselves. So that's been the conversation now that I've settled in. So it's been 6 months in the making down here of settling in. So I've been having some conversations about possibly putting one together in the New York area for ourselves. So we're working on that.
Awesome. We need one in New York City.
We do.
Awesome. We host a meetup once a month in Houston, and then I'll be out at Joe's Best Ever Conference as well. So catch up with some of you there.
All right, great. Thanks again, everyone. And all the attendees, we'll see you in just a few minutes after our break.